this video we are going to be talking about leases, and we are going to be looking at it from the perspective of a lessee. Now the sections that we are going to be seeing in our little example will be rent which is payable. Remember, rent that you pay as a lessee is deductible in terms of section 11A, which forms part of the general deduction formula. So the most important thing here, I'm going to just say, watch out. You must use the leased property in the production of income. Remember, that forms part of the general deduction formula as a requirement. It must be in the production of income. So what I'm trying to say here is be careful of situations where a person is renting a property, but it contains a vacant piece of land which they don't use for a period of time. So even though they're paying the rent, they might not be using it. You can't claim section 11A then. You could consider section 11 capital A, the pre-trade expenditure section, if that is applicable, but it obviously needs to meet the requirements of that section, which we're not going to be discussing now. Then lease premiums. You can claim a deduction if you have to pay a lease premium under section 11F. And leasehold improvements, so this is, for example, if you want to rent a property from me, I say yes you can, but you need to erect a factory building on it. That is a leasehold improvement, and you can claim a deduction for it under section 11G. Very important, just one comment here. Both these amounts, section 11F and section 11G, you can only claim this deduction if the lessor, so the owner of the property, includes these amounts in their gross income. Now the gross income definition has special inclusions that tell you that the lessor must include these ones. So most people will, most taxpayers will, but be careful if you're leasing from the government because they are exempt from tax. So then you cannot claim these deductions, and you will consider other sections like section 12N. So lease premiums, this is how the calculation works. You take the total lease premium amount divided by the total years that you are entitled to occupy the property. That amount cannot be more than 25, and you will apportion it for the period of the year that it was used in the production of income. When it gets to the leasehold improvement, the calculation is performed as follows. It's the lower of the amount stipulated in the contract or the actual expenditure. So if I tell you, you must erect a factory at a cost of R1,000,000, that's the contract cost, and the actual cost that you incur is 1.5 million rands, you will use the lower of those two amounts, which is the 1 million rands. For that excess amount, the excess, you can claim a section 13 allowance, which is the factory allowance, if you are erecting a factory. It does not apply to office buildings. Right, you will then take that amount and you will divide it by the period remaining after the leasehold improvement has been completed. So if the lease period is for 20 years and it takes you 6 months to build this factory, that 6 months will be deducted. So that is, well, 6 months. So that means you are left with 19.5 years. So you use the period that remains. Again, that cannot exceed 25 years. And you have to apportion it for the period used in the production of income. So here's an example for us. X Limited is a South African resident company with a 31 December year end. So it means their tax year runs from the 1st of January to the 31st of December. X Limited entered into an agreement with ABC Limited. X Limited would lease a property from ABC Limited from the 1st of February of the current year of assessment. The property contains an office building which X Limited will use from 1 February. So important here is this basically means, so thus it is used in the production of income from 1 February. That's important when we are looking at things like our monthly rent. Now it tells us that the lease is for a period of 20 years. The monthly rent is 100,000 rands. A lease premium of 500,000 rands is payable, and X Limited is required to erect a factory on the property at a cost of R1,000,000. But then it tells us X Limited commenced with the building of the factory on the 1st of February, and it was completed on the 31st of May. So 1 Feb to 31st of May, February, March, April, May, 4 months. So it took 4 months to complete this factory. The total cost of the factory amounted to 1.5 million. So see here, we spent 1.5 million, we should have only spent 1 million. X Limited started using the factory from the 1st of June of the current year in a process of manufacture. That's important. It's a process of manufacture, it's a factory building, so it means we could consider section 13. So let's do the calculation quickly. So the first thing that we see, rental paid, that is a deduction under section 11A. We entered into this agreement on the 1st of February and we already used it in the production of income from that date. So this is from February until December. 100,000 rands rent a month, 11 months, we get a deduction of 1.1 million. Next is the lease premium of 500,000 rands. As a reminder, we'll say lease premium divided by the total years we are entitled to occupy this, and we will apportion it for the period that we used it. So the lease premium, section 11F, this is also from February until December. 500,000, 20 years, 11 over 12 months. 22917. Then we have our leasehold improvement, the factory building. As a reminder, we take the lower of the amount in the contract or the actual expenditure divided by the period remaining after it has been completed, and we apportion it for the period of time that we used it. Okay, so this factory, we should have spent 1 million rands, but we actually spent 1.5 million rands. It took us from the 1st of February until the 31st of May, 4 months to complete it. And we started using it from the 1st of June. Right, so let's do it. So leasehold improvement, section 11G. Now, what I want you to see is you have to calculate the period remaining once it has been completed. So the total period of the lease. I'm going to split it into 2 parts here. Here it is for years, and here it is for months. I'm going to show you the 2 alternatives. So it is for a total of 20 years, and for a total of 240 months. 20 years times 12 months, obviously. Less period to complete factory. Now remember, it took us from the 1st of February to the 31st of May, 4 months. So 4 months. What is 4 months in terms of years? It's 4 divided by 12. So 0.333 into infinity years. So this gives us the period remaining. So 19.6666 and 236 months. So now you can do the leasehold improvement calculation in one of the following ways. So it is the lower of the actual amount spent, 1.5 million, or the amount in the contract. So 1 million. So you can say 1 million divided by 19.666 years. That's this period over here. And just as a reminder, this is now from June until December, because we started using it from June. So that is 7 months, 7 over 12. So that gives us a deduction of 29,661. Or, and I'm just going to show you, or you could have used the following. 1 million rands divided by our months, 236 months, times 7. And that also gives you 29,661, same amount. So you can use either years or months. I recommend that you use months, especially if you, when you look at that fraction, if you're uncertain how to calculate it, please do use months instead. Now, the total amount that we spent on the factory was 1.5 million rands. We have now claimed R1,000,000 of that as a deduction. So the last bit is the excess improvements. Because this is the factory, we can claim Section 13. So we spend 1.5 million. We should have only spent 1 million. So the excess amount is 500,000, and we get a 5% allowance on that. So that is 25,000 rands as a deduction. And that, in a nutshell, is a simple example of the deductions available to a lessee in a lease. Best of luck with your next test.